Hello, traders. It is Wednesday, January 15th. Hard to imagine that the year is already starting off and we've got earnings season kicking off. Harry, how are you doing?
I'm good. I'm good. Been surrounded by evacuation notices for the past week, but other than that, fine.
You look like you're traveling incognito.
Yeah, you know what? Just gonna take a look. There we go. The hooded trader.
Uh, well, we've had interesting market developing over the course of the last week. In last Wednesday's live event, I told you I thought the market was going to head down to the 100-day moving average, and we certainly visited it. My pick from last week was AFRM, affirm, and let's take a look at that. That had actually done very well. So let's see if we go into that chart. There is the live event. We had some very nice follow through selling on that. I still like the short. Look at the stock today, drifting lower when the market has been higher. And actually, the market is into its gap as well. And then on Sunday, my Sunday recording, I gave you LVS. So that recording came out right here. And that was the price action Monday, Tuesday, and Wednesday. Hello. Nice. Harry, what did you have for us last week?
Trying to remember. I believe it was. I might have had two that I recommended. One was AMD short, which obviously did quite well if you shorted AMD last Wednesday. You shorted it anywhere around 120 to 125, and it dropped all the way down to 114. So
Oh,
AMD short was one of them. In fact, that still is a decent short, even though it's up today. It hasn't yet filled that gap, but I'm not recommending keeping AMD short. If you have profit, by all means, you should be taking your profit. Although I assume most of you already have if you took the trade. And the other one was a potential Adobe short, and that there would have been a short right around 420-ish. It's currently at 416. So even if you stayed short in that, you are still in profit. And during the week, it dropped down below 403. So you had
yeah.
$13, $14 worth of profit there. And Yeah, I think those were the two that I had recommended.
And look at that baby back off today. Adobe in that gap very nicely. Let's keep the 5-minute chart of the S&P up. And you can see how that's the low of the day. We're testing, testing, testing it. I tried an early short in here and I was looking for a possible gap fill. And I lost 20 points on my initial S&P trade. I didn't like that bullish hammer right there from inside the gap. And then we followed through with this long green candle to a new high of the day. And we started to get a little follow through on it. I thought, yeah, okay, I'm going to take my loss on it. We'll wait to see what else forms. And then off the high, I started to see these red candles. This is not strong price action. So when I look at this, oh, Pete saw two red candles off the high of the day. That's why he's getting short. No, how we get there is important. Mixed overlapping candles told me this move is not very strong. The 50-day moving average was in range. And there you can see it right there coming into play, very close to the high of the day. I felt that that resistance was going to stay intact. I didn't like this rally, so I shorted there. I added here. I added here. So I'm currently short ES at 59.74 average. We'll see what happens. I am fairly bearish on the market right now. Been a while. So, Harry, what's your sentiment on the market right now? What's your take on what we've seen so far in the
I'm not
last
sure I'm as
few weeks?
bearish as you, but I mean, look, to me, the market's always been about three numbers right now. It is the election gap at 585.36, the 100-day moving average at 581.01, and the 50-day moving average at 594.22. On Monday, we broke down below the 100-day moving average, and it certainly looked like things were going to get pretty bearish there. But a trend line all the way back from October of 2023 comes into play and seems to have saved the day. It bounces off that trend line yesterday, comes back above the 100-day moving average. Today, we gap up through that election gap. So we're now above that. And now we just have that one last point of resistance. Is this yet just a test of the 50-day moving average? And if it is, then, we're certainly uh, possible to revisit those lows and perhaps even go down back below the 100-day moving average. But for me, it's all about that 50-day moving average being the last barrier for the market. If it can get through it, and it's certainly close to it right now. I mean, we're at 590.52. It's 594.22, so it's 4 points away. Um, that I think is the impetus. I certainly don't think the CPI number this morning was so amazing that it justified a 8 point jump in SPY, but clearly the market was looking for something to launch off of. We've been trying to fill the gap a couple of times today on SPY, and it just keeps bouncing back above it. I think if we get above VWAP, we might just start seeing some, drip higher, but we'll see.
Yeah, I've been noticing that over the course of last fall and into December, deeper gaps, marginal new highs, light volume. These are all signs that the market is getting very tired. At the high in December, we're approaching a measured move, which I use. We're probably about 10 points away from it on the SPY. Limited upside, fairly substantial downside. Let's take some money off the table and then blam, there's the reaction to the FOMC statement. Hey, folks, we're not going to be cutting rates quite as much as all of you are expecting us to. So we get this bounce in here that gets smacked down and smacked down. The point is that we're spending much more time below the 50-day moving average. That means that we're comfortable there, and sellers are keeping a lid on the market. This is a fairly tough formation to trade. It is a downward sloping trading channel. Here's why it's hard to trade. Oh, look at this breakdown. Look at this breakdown. I'm going to get short here. Look, we just broke through a VWAP Q. Doink, doink, doink. Market marches right back up. Bull markets die hard. We should expect big bounces in the initial stages of a market decline because buyers are conditioned to buy dips. This is a long-term uptrend. So we should expect that. So now the market starts to show its true hand. No, we didn't go and break a new high. We backed off, another lower high. So up in here, you start thinking, gosh, we're going to make a new high. This looks good. I'm going to buy here. And then what's the market do? It falls. Oh, crap. I was right the first time. It's going down. I need to be short in here. We're going to break the 100-day moving average. So you start shorting here, then you cover here, you get along. You are so twisted in a downward sloping trading channel that the best thing you can do is to identify that this is very choppy price action, mixed overlapping candles, do nothing over and back above the 50-day moving average. Eventually, you start to see that this is a downward sloping trading channel. And since it's downward sloping, your tactic is this: short when we reach the upper end of it, buy when we reach, cover the position, cover the short when we reach the downward portion of the trading channel, wait for the market to get back up to the upper line, short up in here, take profits down in here. That's what you should be doing right now. So that's the tactic, but it is a tough condition to trade. And now that we've had that break below the 100-day moving average and a bounce above it, there are going to be some shorts who had to cover in here. So we were looking for some follow through, and the CPI is what got things going. So that's my take. I think we continue to struggle to test the 50-day moving average, and up in here could be a week, could be 10 days. The next short will set up in this area when this bounce stalls.
So I want to address something here. So we got a question. I got a question here on the YouTube chat. Are you guys familiar with an indicator called BX Trender, which is meant to identify institutional buying and selling? No, it isn't actually, but okay. Curious if you think it's legit or not. So let's talk about this for one quick second. Um, First off, all indicators are based on what you're seeing, right? Which is price action, movement, volume, right? So you see, you have volume over time, and you have price movement over time in a stock. There's no secret underlying metrics that go into it. It's just some manipulation of those numbers, right? So all of those numbers, whether you can take averages of the volume, make averages of the price movements, um, take averages over time, but it's all different ways of combining those numbers. So right off the bat. So BX trended, right? Like most indicators, the 1OP aside, which is not a lagging indicator, it's a forward predicting indicator. Um, BX trender is a lagging indicator, right? Which means that it's a color coded indicator, which means it'll change from red to green, green to red, blah blah blah, bullish, bearish, and most of the time you're going to get this change of the color after a bulk of the move has occurred. Um, it does terrible in choppy markets, right? So basically, it's going to tell you what you know. In a bullish market, a lot of these things are bullish. In a bearish market, it's bearish. In a choppy market, it's going to be all over the damn map and flashing colors like it's a out of order stoplight. Um, and it's basically made. It's a moving average indicator that takes in ATR into account. So basically, it's doing similar to a regression. It's basically saying this is where it should be based on ATR. This is where it is. Okay, so this is a stock is supposed to move $2 a week. It's moved $3 this week. Wow, it's bullish. Oh, shocker. Um, that is not giving you an indication of institutional buying or selling. Relative strength is comparing the price movement proportional to the market is giving you that. Volume plus relative strength certainly is giving you an indication of institutional buying or selling. But these indicators, which are just yet another fancy way of recombining what you can already see, volume, price movement, etc., uh, they'll be presented to you in ways that look like, wow, this thing must really work. This thing must be great. It's not giving you, it's not like there's some sort of secret, like, oh, this is an institutional buy, this is a retail buy, and this indicator knows the difference. That is not the case. There is no check on that where you can do that. So uh, just take a lot of these, almost all of them, with a huge grain of salt, please.
Yes, they're all shiny objects that young traders will glom onto. You can see my chart right here. What do I have on there? I have VWAP. I don't have anything else. I have a little overlay on volume, so I know what the volume is. That's it. If you learn how to trade price action and how to read price action, you don't need anything else. Indicators, as Harry mentioned, are lagging. Everything is reflected in the price action. And what these shiny objects are going to do is they're going to rob you of money, and there's going to be a new one every week. I promise. And it's going to be better than all the other ones. This is the really good one. I've been seeing this for 30 years. Okay. It's going to delay your journey. You're going to spend time. You're going to waste time. Oh, this is the age of technology, Pete. How can you say that? There's got to be something good out there. No, it's the same old bullshit. And you're going to spend time, you're going to waste time on it. And then 6 months down the line, you're going to go, yeah, I spent a lot of money on this and I shouldn't have done that. So, yeah, where was that price action thing again? How do I do that? Don't do it. Stay the course. Learn how to read price action. It's early, it's accurate. Price is truth. Had a couple questions here. When is Oxy going to hit the 100-day moving average? We'll take a look at that.
I'm in
Bank
Oxy. I'm
stocks.
long Oxy right now, which is probably why
Oh,
people are asking that question.
good. Then I'll let you handle that one.
Sure. So look, I went long Oxy, one because same reason I went long Riot and I took profit on Riot. One, because you see on the daily chart, it is very bullish, right? You get this bounce off the bottom here of 45.17, and it's just been moving up ever since, up through the 50-day moving average. Doesn't it stops for a second, checks it, tests it, jumps up again, consolidates, then bam, up through the 100-day moving average. Now it's consolidating again. You get this nice bull flag on the daily chart. You get this bounce off the 100-day moving average, which is down at 51.32. So yeah, even though Oxy's been a little bit bearish the last 2 days, I went in on Monday where you see that nice bounce off the 100-day moving average. 52.74 is probably some horizontal resistance, so I'll be looking at that a little bit more, which is the top bottom of the gap from 10.15, and also if you just draw a straight line on that price point, you'll see it hitting a lot of candles. So I'm staying long Oxy. I'm fine with the support there. I have shares. I have some calls in it. I have no issue. And I'm also long NVIDIA right now. I went long NVIDIA this morning. I like again, another SMA bounce, which is the focus of an article I'm doing right now. So those are my two longs.
Is NVIDIA your pick for today?
Might be. I'm hesitant
Okay.
to pick a long, but it may be my long pick. Yeah.
Okay. Very good. And let's see, the other question was about bank stocks. Yes, they reported earnings today. So we had JP Morgan Chase. JP Morgan Chase is getting through. It's trying to get through this horizontal resistance level. Nice little bullish hammer here. WFC also on its high of the day, looking pretty good. Not through that high there. And Citigroup, I think, was the other one. So we're going to hear from a lot of banks today. Citigroup's actually got a very nice little breakout here to a new high. And that is a really nice bullish breakout right there. Look at that long-term trend line. That is a high plus. Boom. And let's take a look at the volume. Obviously, is going to be heavy today. Even when the market pulled back, it just checked VWAP. That was a nice entry point for you when the market stopped going down. You had a chance to get in on that one. So, yes, the financials look good. Financials are very important, in my opinion. Also, they're the oil that lubricates the economy. We need credit conditions to remain strong. So good reaction. We are starting to see an increase in consumer defaults. So I was looking at what their write downs might be, but I haven't had time to really check to see if their bad loan write downs are starting to increase, or what that condition is.
So, from reading the wiki article on level 2, is the correct conclusion people who use tape reading are just simply getting lucky on their trades, or not getting lucky on their trades? Show me people that use level 2 that can prove they're consistently making a profit off it. Level 2 is one of the most manipulated, useless pieces of crap out there. There's nothing on there that's going to really help you. You're not going to be able to say, "Oh, look, there's a buy wall here," or sell. Those a lot of those are just phantom ghost numbers that are being put up there. It, I've yet in all of my years to see. I've seen a lot of people say how they use level 2. I've seen a lot of videos of people saying they use level 2. I've seen a lot of people charging people to teach them how to use level 2. I have yet to see someone prove, and by prove I mean post your fucking trade and then post your exit and do it in real time. In real time. Show it to me on time and sales that it's your trade and post it in real time so I can see you're doing it consistently, that you make a profit. I do
Yeah,
that. If
well,
not, if I can do it, you can do it. I have yet to see a single person using
and
it.
here's
So no, I
here's
wouldn't concede
here's
that they're getting lucky.
here's the point to it too, Harry, is take the screenshot. Show me exactly what in that level 2 screen told you that this was a buy or that this was a short? How did you know that that bid was legitimate? Because if you've traded S&P futures, do you ever put a trade in and change a price? Yeah, everybody does all the time. It's in a constant flux. And if you're spending time watching, I don't trade 1 minute bars either, by the way. What a bunch of freaking noise. You can't see the trees from the forest. It's all, you're going to be trading based on reaction. Okay. So you really need to look at bigger moves that are going to come along, not scalping 2 and 3 S&P points. And no, you're not watching level two. If that's what you want to do, okay, you can go learn that methodology. It's not for me because my eyes will look something like this. Okay, that's all you're doing is you're staring at these charts and these little ticks, these minute little movements. You get institutions in there with buy and sell programs whipping around baskets and futures, the cash market. They're doing all sorts of stuff. And here you are focused on the little wiggles instead of looking at what the 5 minute chart is telling you. That's all I need. Okay. And I'm not looking for wiggles and jiggles. I'm taking 30 points out of the S&P. I'm taking 40 points out of the S&P. That's what I'm trading. And when I get the move, I'm not taking a 2 point scalp. I'm adding, and I'll make a shit ton more money than anybody trading level two. I promise you that. But I won't trade every day.
Okay. Hopefully that answers your level two question. How do unfilled in the same day gaps influence your trading strategy? There's a gap down on Friday and a gap up on one day. Uh, the gap is being established, right? You don't know it's a gap until the day ends because you could have something that gapped up, right, and starts moving up and then reverses, and then all of a sudden finishes the day below the prior day. So there's no gap there, right? So you really need the gap to be established. But obviously, when you're looking at gap ups or gaps down, and you're looking at intraday action, so you're not looking at the larger picture. You're not looking at is this a gap for a gap fill or something on a daily chart. Then it's pretty clear. The gap today on SPY is pretty obvious, right? There's a pretty straightforward gap up here that came in at 589.20, right? So 589.20 is where that gap begins. And so we tried to dip below 589.20 a few times. Not actually, we came close to it, 589.50 at 8:55 a.m. out here. But beyond that, we haven't been able to enter into that gap yet. So maybe the second bar of the day, 589.20, and then right around there. But that is the established gap of the day, and you have to go into it and then continue down through it. Usually for me, I'm looking to see, is half that gap going to be filled? If half the gap is filled, then I'm obviously looking at a reversal on the day. But it has to be established for it to be working for me on a swing trading or daily basis.
Okay, on a gap reversal, which gap reversals are our best risk reward profile, you want to see the gap up, long red candle, long red candle. That tells you that sellers are smacking that thing senseless right out of the gate. Okay, that's going to be a pretty good gap reversal on heavy volume. Uh, as far as gapping goes, those are our worst risk reward profiles. I'm not going to get into a dissertation here, but much of the move has already been exhausted by the gap. What was the news that has buyers so freaking excited that they have to buy now and they have to buy aggressively? Well, today we didn't have that kind of news because you can see mixed overlapping candles can't move higher. So gap and goes, most of the move is exhausted, and your risk, if this thing falls apart, is where are you going to put your stop? When this thing craters, it's going to be in the gap in a second. You're going to be down 20 S&P points, 30 S&P points like that. So you've got to be very careful with gap and goes. I've written about it extensively, and I'm going to leave it at that.
So I have this question here about uh, right. I have this question here on the bank stocks. Obviously, earnings have started pushing financials higher. Financials is the strongest sector today. But what I see here is this speculation that's going beyond even the earnings, right? With the speculation of, and by the way, I'm being hard on all of you and all of your questions for a reason. And that reason is that this shit is hard. It's really hard. And it becomes so much harder when you think that these, kind of amorphous thoughts that, or something you read a headline off of, can explain a movement or can justify a trade. And so you have someone here asking, will Trump's deregulation help bank stocks even more? Um, Number one, that should not even be a thought in your head. Number one. Number two, I challenge you to tell me deregulation of what? Because the answer should be deregulation of Dodd-Frank, right? The rollback of Dodd-Frank. And then what does that mean? Well, the answer that should come in your head is reduced capital requirements. Less scrutiny on their spend. Uh, you know, uh, Less systemic risk for banks. Um, that should be the answer that comes to your head. What that strikes me as is that you've read some article, you read some headline that said, "Oh, deregulation of banks is going to lead to." You don't know what it means. You don't know how that works, and if you don't, it should not go into your thought process. It should not be part of your trading process. It Unless you are a consistently profitable trader, you should be looking at one thing: price action. And you should be looking at the price action compared to the market. You should be looking at the market. You should be looking at the price action of the stock and the two compared to each other. That is what you should be focused on. And the more you pull away from that, the more risk you're putting in, because you're entering into areas that are informed by biased articles of which you might not even have read, of tweets, of things that you probably haven't researched. So when you toss out, "Oh yeah, Trump's going to deregulate and that's going to make the banks," that might sound great at a cocktail party or talking to your friends trying to sound smart. But when you start using it for a trading decision and you don't know what the hell you're talking about, it becomes a problem. So please stick to price action.
Yeah, the institutions are going to do that analysis, and they're going to look at how much more money JP Morgan Chase could make in that environment and what those deregulations are likely to be and what the impact is on the bottom line. And then they're going to discount future cash flows. Do you know how to do that? Do you know how to do that? Probably not. I don't know how to do that. So if I just watch price action, then I can determine if the institutions are buying JP Morgan stock or Citigroup stock. And if I keep my analysis very simple, then I'm not going to cloud my trade with all sorts of other things that I don't know anything about. It's that simple. You follow price action. As long as the price action is steady and you get nice, tight, orderly candles on heavy volume of a single color, then you know the institutions are in there buying it. If it has strength relative to the S&P 500, when the S&P 500 pulls back and the stock holds steady or moves higher, you know the institutions are still accumulating. You stay in the position. That's how it works. You don't need bubble charts and level two and outside research and analysis and CNBC Pro or whatever the hell else is out there. You just need to learn how to read price action. Don't know how to make it any easier for you folks.
I mean, you could just do the opposite of whatever Kramer's doing. That seems to work for people. Um, Good recommendation here from Saul Sonics. I like your pick. I like it a lot. You have recommended and put on our radar Hershey short. Um, this is one ugly daily chart. My God. Uh, just when you think this thing can't drop anymore, it consolidates, and then bam, off a cliff again. So this chocolate factory does not have a golden ticket. Hey, you see what I did there? You see that? That was terrible.
Oh,
Wow. Wow. By the way, as an aside, I'm sorry, Grandpa Joe, the biggest villain in all of movies. The bastard that's lied there while his family starred in bed for 20 years, doesn't get up. All of a sudden, his grandkid gets a golden ticket. He starts dancing the fuck around. Seriously? Yeah. Um,
uh,
I like Hershey Short. I love it. Great pick, Sauce Onyx. Nice going.
yep. That is nice. You do have to be careful. You see this downward sloping trend line that comes into play right about the current price. The only reason I say that is just in the last week, this is getting climaxy. Okay. So if you're short, cool, just have one foot on the brake. And as soon as you start to see some support, I would exit. And then any kind of failed bounce is going to give you another entry point for that. So it's getting a little parabolic for my taste, but check the news and I'm sure there's a reason for it. You can see the volume is heavy. So on any kind of little attempt at a bounce, you're going to get a very nice entry point for another short on that one. Did have a question on Tesla, Reddit, APP. Pete, are you hanging on to these stocks? Yeah, they're investments, salted away, not going to look at them. And if the market falls apart, I'm going to be short all sorts of stuff. I'll be short futures. I don't need to worry what those stocks are doing. They'll be naturally hedged based on my short term trading activity.
Ever use dollar volume? Why the fuck would I use dollar volume? Honestly, what is with you people? Oh my God. For those who don't know, basically, this stock is worth $150. It traded 1 million shares today. So basically, $150 million is the dollar volume. Wow. All right. You know what matters? Is the volume of a million shares above or below average? That's what I care about. What do I care about with the total dollar amount that's been traded in a freaking stock for? That has no context to it. It's meaningless to it. And if you look at the average dollar volume, then you might as well just look at the average volume because the average volume is what matters. So, no, I don't look at dollar volume, and neither should you. How are you all not losing so much money?
You can see this is my chart. This is the same chart you saw last week. This is the same chart you saw 2 months ago. This is the same chart you saw 2 years ago. Okay, I do have historical implied volatility here, and that's so that I know what the option implied volatilities are. It's not an indicator, it just tells me if I'm going to do a trade on it, am I leaning sell side, sell option premium, sell puts, sell call credit spreads, or am I leaning buy in the money, buy lots of time? It's all I have it for. And this is simply real relative strength. So when it's negative, it's weak relative to the market. And then I have a volume overlay, and then I've got the major moving averages. For stocks, I use AVWAP E, and for the S&P 500, I use AVWAP Q. Haven't changed a thing in a very long time. I don't need to. This is all I need. It keeps things very simple. It's what you should do. Focus on simplicity.
Pete, does the trade signals work with Intrino data? Someone wants to know.
Yes, they
Your
are
answer, yes, they do.
available with the Intrinio data feed.
Do we have an article about why you shouldn't have pre-market on your charts or after hours either? They don't matter. End of article. There you go. But
Volume.
maybe you want to
There's
expand.
no volume. They can move that thing away around at whim in pre and post markets. So there's just nobody standing in the way. So if you're trying to include that in your technical analysis, plus your charts get all wonky then too when you start adding that extra data into them. What you want to focus on is what's happening during the day. And what institutions are doing during normal business trading hours when they can get some volume off. They're not out there actively trading when the market's not open.
I mean, the sense that I'm getting, and by the way, there are some nice picks here. Like Hershey was a nice pick. And then we get this pick on APA here from VK. Nice breach of the 50 and 100 has room to the 200. I agree. This thing has popped up above the 50, popped up above the 100. Still looks bullish today. I wouldn't trade it right now. It's below VWAP, but it's a decent trade. I mean, look, it just like Oxy is. All oil stocks have been doing this. This one's obviously a little bit stronger than Oxy. It just bounced off the 100 SMA. The only problem with this stock is that you don't really have much of an ATR on it, so you'd have to really increase your the size of your trade for it to matter. But in terms of pure technicals, I agree. Um, but
One,
yeah,
I'm sorry, were you going to continue on
no,
APA?
Pat, I'm going to go on another rant, but you go ahead on APA.
Okay. I was just going to mention that there were some questions coming up in the chat room and on Oxy. It's like, oh my God, the stock is taking off and I bought it and now look at it. It just fell back. One thing that you need to do is you do need to understand what the company does. What is their industry? And in a case like energy stocks, this is a commodity. Okay. These guys are not figuring out cures to cancer, or they're not developing supercomputer chips where there could be some news and some type of new development that really fuels that stock for a very long period of time. APA, Oxy, they are commodity stocks. These are energy companies. So when you get a big liftoff like this, and you miss it, do not chase it. Your mentality should be, I know this thing's going to come in. I'm going to wait for that dip. I'm going to wait for that support. And if I'm looking to trade it, I'm not going to chase it here. I'm not going to chase it here. I'll wait for that drop. Oh, wait a minute. It went below VWAP. I'm still going to wait. Oh, wow. It came all the way back down to the opening price. All right. Here we get a nice little opportunity and some support in it. Here we get a nice little opportunity and some horizontal support. All right, I could try it in here. So buy dips on these types of stocks. And the same thing goes for consumer defensive stocks, the really old, stodgy stocks. To a large degree, the same thing happens with financials. It's a bank. Okay, there's no cure for cancer today. You don't need to chase that. You get a test of VWAP, this is where you want to buy it. That's the way that you need to enter these day trades.
It's a good question here. I've been trying to trade pure price action from Zab, but get my ass handed to me when I went long. Got my ass handed to me when I went long on IONQ on 1/6 before the huge drop. What did I miss? It's an excellent question. Um, so look, you made the right choice, right? You went long on this stock, which technically looked great ever since September. This thing has been powering up from $7 all the way up to around what 450, somewhere around there. Um, and every time it pops up, it consolidates and then just pops up again. So you have this really nice trend at staying above the 50 SMA. Now, what happened was you got hit with a news event, right? You got hit with a news event from Jensen coming out basically saying quantum computing is still 10 years away, and then kind of makes a side comment. No, it's actually more like 30 years away. And all of these stocks, INOQ, QBT, right? All these quantum based stocks. QBT is the most ridiculous of all of them. The damn company's in Quantum Computing Inc. It doesn't have a single quantum computer. It doesn't make a single quantum chip. If you look at their address, and they don't own any other places of business, they don't even have a warehouse or a loading dock. They don't even have a place to ship out a fucking product. I think this thing used to be a former stamp collect. I don't know what the hell they were, but they put quantum in their name, so great. So the only thing I would say that, you know, you have an issue with is you bought into a trend. You bought into a hot trend on quantum computing for a while. AI, right? Anything that was AI, including a stock named AI, became hot. And so when you buy into a trend, you have to understand that there are certain things that can overcome technicals. Earnings events certainly overcome technicals. Um, However, trend events can overcome technicals when something comes in to either boost the trend or dismiss the trend. Jensen threw a bunch of cold water all over the quantum trend. However, if you want to stick with it, if you look at IONQ and you stuck with the stock and you said to yourself, all right, based on the technicals, I am good here until I see a confirmed breach of the 50 SMA. Well, you didn't get it, right? You got this breach of the 50 SMA, but it was never really confirmed. And look at today, bounces off of it up over $9. You have this bounce. Well, technically, right now, IONQ, if you still held that stock, well back on its way to recovering whatever loss you might have taken. So it depends also on where your tolerance of support is. So my advice is to have higher tolerance for a farther away support on those type of trend trades. Reduce your trade size.
Yeah, and my take on IONQ is stock in here. Oh, this looks nice. This is a beautiful breakout above all the major moving averages. I buy here. Oh, okay. And besides, if you're talking price action, I bought this stock and I got my ass handed to me. When you bought the stock, if you day traded the stock, you were not day trading the stock. And the reason I know that is because you would never have the position overnight to take that hit. So obviously you are swing trading this. Okay, well, if you're swing trading a stock that has gone up 300% in whatever 6 months, it's okay. I'm not saying don't do it, but you start out with a starter position right here. And you know that you're going to take some heat at some point in time along the way. So you're mentally prepared for it. Well, it happens here. And now you get the bounce. You're above the 50-day, you're above AVWAP Q. You're trying to get into this. This could be a nice little place for you to add to the position in here. Okay, you make a new high, you add to the position here. When you do that as a swing trader, you buy here, you buy here. Okay, you're getting some price confirmation in here. You could buy in here, you buy in here. Now your average cost is way down here. And you can weather pretty much any kind of storm along the way because you're just averaging in. So we don't know what your swing trading time horizon was, but in a stock like this that's moved like this much, the best that you could justify having on at a price point this high is a starter long position. That's it. Okay. So I think position sizing was your biggest mistake because when you got this drop here, you took a quote unquote beating.
Nice move on Nvidia here, by the way. Um, Moving up. So I am now a profit on that Nvidia trade, watching it closely, but I like it. Let's see here. Johnny Lang, for the love of God. I mean, I haven't even read. I see VWAP. I mean, I see Fibonacci retracements. Help me. Oh my God. What is wrong with you? I read an article about a new stratagem that analyzes, hold on, that analyzes the multi-time frame confluence between the 5-minute and 30-minute charts, cross-referencing VWAP deviation and Fibonacci retracement ATRs. So Fibonacci lines. You have these people that swear by them. I've written articles on the Fibonacci thing. Uh, Draw random lines on your chart, random, right? Uh, they're going to work just as often as your Fibonacci lines are in terms of intraday or daily support and resistance random lines. Just draw them. So there's nothing wrong with looking at the 5 minute and the 30-minute chart. Pete does it, I do it, to confirm a trend or same signal, right? And the trade signals that Pete has, you can look at the 5 minute and you try to confirm it with the 15-minute chart. There's nothing big or revolutionary in doing that, right? That is normal. You don't want to get to analysis paralysis and go, let me look at the 5 minute to the 1 hour, the 5 minute to the 4 hour, the 15-minute to the 2 hour. But if you take a basic 5 minute to 30 minute, you want to compare the trend, fine. There's nothing wrong with that. So I don't know what Fibonacci retracement ATR is. ATR on its own is a helpful measure. I've never heard of a Fibonacci retracement ATR. So but it sounds like you just put together a bunch of really popular trading buzzwords and called it a stratagem. And then you threw in some fib levels, maybe a multi-time frame. Hey, let's put a VWAP in there. What do we miss? An ATR. You put a dash of ATR in there, and confluence. That's good. Confluence. Let's put that there too. Okay, go ahead. Use that. Use that all day long. Great article. And I assume it's a joke, obviously, maybe here clearly, but the sad thing is it's impossible to tell if that is a joke. It literally is impossible. You people are driving me nuts, but funny.
I had a question on PANW. This is a good question. You entered PANW short on the 200-day moving average break 2 days ago. Should you close it out for a loss based on today's price action? So when you're evaluating a trade and you're looking for an entry point, one of the first things is you've got this nice steady price movement through the 100-day moving average, and now the stock can't get above it. Good. That tells you that there is still some selling pressure there and that the stock is likely to go lower. So the stock drops down like this to the 200-day moving average, and look at the distance that you have from the 8 EMA. So the stock is definitely extended. Is it below the 200-day moving average? No, it is not. It just barely even spent half a day below the 200-day moving average. Your first notion on a stock like this is look at how nice and orderly these moving averages are. 50 above 100, which is above the 200. That tells you that this stock is in a general long-term uptrend, very strong. When you have this, then your mentality should be buy the dip, buy the dip, buy the dip. See, when you get down to these major moving averages, like here, you're waiting for support, you're expecting support. Didn't happen, so I'm not going to buy it. You get down to the 200-day moving average. Oh, I'd like to buy it, but I need to make sure that I've got that support. There it is right there. So you would be a net buyer here based on a long-term trend of the stock, but you would not be shorting it here. So your entry, you needed to have a clean crackdown. You needed to make sure that the stock was fairly close to the moving average like this. See the 50-day moving average here? That cracks down, it stays below, it stays below, it stays below. That is resistance. Now I can consider taking a short position because I'm still close to the EMA 8 at this stage. The move is way too accelerated for you to take the short. Now, one exception on this, and I will say Hershey's was a nice example, is if you get one of these watershed events like this where the stock just can't uptick and you get these M15, this is an M15 chart like this, where you just know sellers are in there heavy, no rallies at all. Then you can day trade this, but you got to be in and out. So the first sign of support, you have to be in and out. PAMW, do you have that? Oh, heck no. You don't have anything close. You got mixed overlapping candles. When you have nice, tight, orderly patterns with heavy volume, then you can predict future price movement. Why? Because you know the selling pressure is heavy. You know that sellers are motivated. When you're all over the place, That's not heavy selling pressure. You have no ability to predict that future price movement. And I say it's like predicting the flight of a bat. Okay, you're not going to be able to do that, but a goose in V formation you can. Just make sure it's not too far out of the gate. Okay, and in PANW's case, it was just a little too far out of the gate. Would you cover it here? Do you need to get out? It's choppy. I would probably give it a little bit more time. If you're in a losing position, I think the market overall is going to struggle to get through the 50-day moving average. So market first, market first, market first. That trend line in that 50-day, I think, is going to keep a lid on the action. So if I were in it, I wouldn't have entered here for sure, but I would probably stick with it just a few more days to see if you get the right market action and you get any pullback in that stock, you should exit as close to the 200-day moving average as you can, because for right now, that's showing support.
Now let's see here. And yes, Johnny, you are going to give me a damn heart attack, but fair play, good joke. Uh, the CVNA, are we still bearish? I am not bearish on CVNA anymore. It's bouncing off of the 100 SMA at the moment, up $13 today. This is just a very volatile, choppy stock. Huge ATR on this stock. It does seem to be following some semblance of technicals, but for example, on a normal stock, now this is look at the daily chart of CVNA. On a normal stock, you might get a test of the 50 SMA and you get a bounce up, right? But let's just say this CVNA, this entire thing is a test of the 50 SMA, 100 SMA. Look at the distance, like 2-3 weeks here of price action, choppy price action, probably just to eventually wind back up at around 255 where it started. Very choppy stock right now. Before that, it was kind of orderly. Everything was moving up nice, and candles were nice, not long wicks. Look at the difference between the price action and the orderly stepwise price action from September all the way up to October, and then from end of October till now. I mean, it's just a night and day difference in the way the candles look, and particularly starting in December, the way these candles look. I would stay away from it at the moment, but I'm certainly not,
Yeah,
certainly
that
not.
that was a short. That was a
What's
short
that?
of mine. That was a short of mine. I think 2 weeks ago or so, and we had this nice crackdown in here, and then a couple of brokerage upgrades that came, and the stock is breaking out right now. So yeah, you got to get out of the way of this thing, and
Yeah.
then look to reload. If the market rallies up to this downward sloping trend line and the stock struggles, then you know that you've got an opportunity to reshort it when it comes back below the 100-day moving average, and that's how you would have to trade it. But before you take a trade, you've got to understand if this is going to be a day trade or a swing trade. And it's really important for you to stay true to yourself. And a swing trade, is this a 2 month long swing trade, or is this a 2 day long swing trade? What is your time horizon? What are your expectations for the stock? That's going to help you structure the trade. And so, right now, again, as far as the overall market, because that's our first consideration, is we have to expect choppy price action with a downward bias. So short up here, cover here and take your gains. Short up here, cover and take your gains. Short back here. So you're shorting at these tops and you're taking gains down the low at the lower end of this trading channel, because this trading channel, I think, is going to persist for, my guess would be, another month or so. And I think we're probably going to see, let's see, what do we got coming up here? So we've got retail sales tomorrow. I think that's going to be important because it's going to tell us what the Christmas holiday season was like. Were consumers spending? And by the way, haven't talked about our picks yet, so I'm going to put up my pick. SIG is my pick of the day. I posted this in the chat room this morning, and you can see the price action while the market, let's put the market up. Let's get that market rally. Nice bounce. Okay. What does the stock do? Drifting lower, lower, lower. Okay. D1 chart, nasty little bugger here. massive breakdown through horizontal support. So, yes, this move I believe is going to continue. They provided guidance. You'll be asking me, I'm sure, Pete, look at how far that freaking thing is from the EMA 8. Didn't you just tell us not to short anything if it's too far from the EMA 8? Well, in this particular case, you can make an exception because there was just news out yesterday and the company said, hey, we've lowered guidance. Okay, not good. Christmas sales, no bueno. We were expecting same store sales this year to have a 2% increase, which is just meager same store sales increase. Doesn't even keep up with inflation. No, same store sales were down 3% during the busiest season of the year. Not good. So yeah, I like SIG as a short, and I'm looking for it to continue lower. Would I just be gonzo, gotta short this thing for the next 2 months? No, I'd be day trading it in here and looking for follow through for probably about the next week or so, understanding that I'm trading against a market that's probably going to try and continue to bounce until the Trump inauguration.
My pick, so by the way, before you get my pick, someone asked about MBLY here. Got a short position MBLY. Is it time to exit? I don't know when the only time I could see shorting that stock would have been last Wednesday when it broke below the SMA 50. Other than that, you can't short it on Friday because it's too close to the 100 SMA. You can't short it on Monday because it's bouncing off the 100 SMA. You can't short it yesterday because it was up. And you certainly shouldn't short it today because not only is it up, but it's back to approaching the 50 SMA. So the only time I hope if you did short that stock, it would have been last Wednesday or perhaps last Tuesday when it broke below the SMA 200. So if you are short that stock right now, 1757, I'd put 1760 as your alert. If it breaks 1760, get the hell out. That would be your point of resistance. Also, someone said they bailed on their opposite calls. They couldn't take it anymore. Here's the thing. Daily chart, SMA 100, 5132. When I took the trade, I was fine keeping the trade on as long as 5132 held. It hit it on Monday. It came try to test it again. Test it has held. The support is there. So if you're going to take a trade, then you have to know, okay, here's where support is. I am fine holding it until you can't be like, oh, there's support, but I'm going to bail on this trade if it starts dropping towards support. Well, then there's no point of support anymore, is there? Then it becomes this sort of amorphous concept of whatever you want it to be. Either it holds or it doesn't hold. If you're long a stock, you're banking on support holding. If support doesn't hold, I will get out of the trade. If it does hold, it will probably bounce back up. So no, I am not exiting that. But my pick of the week, here it is. I am picking long NVIDIA. Long NVIDIA is my pick of the week. I like SMA bounces. I love SMA bounces. They're one of my favorites. And NVIDIA here has had a tough couple of days, right? Last week it drops down to the 50, 50 doesn't hold, drops below the 50. You have this upward sloping trend line from December 17th. Bam, that doesn't hold, falls below that. Then on Monday here, you have the SMA 100. That doesn't hold, falls below that. And then come yesterday, all of a sudden, NVIDIA pops back up and looks like it's going to break above the SMA 100, but no, closes below it. But today is proof and confirmation to me that the SMA 100 is holding. NVIDIA is bouncing off of that. And most likely, when that happens, when you see that pattern, the next thing you'll see, much like with MBLY probably, but the next thing you will see is a test of the 50. Well, the 50 is at 139.60. I got this at 135.32. If I can get out of this at 139 or somewhere around there, if it tested and it doesn't hold and it bounces back down, I'm perfectly happy with that $4 win. So Nvidia is my long pick of the week, and running a rooming G on Hood. Is it a good long? As much as that crap stock is good for anything, yeah, the daily chart looks like it's a fine long. It broke out of compression. It's above all SMAs. It's not overextended. The volume is good. Hood's a fine long, sure.
One point on Oxy is that you had mentioned that, not you, but the viewer mentioned that you bailed on your calls. Okay.
I did
If
not. They
you're
did.
buying calls, I'm sorry?
I didn't bail on the call. They did. Yeah.
No, they did.
Yeah.
So my point is, if you're in a stock like this and you've got weekly call options, oh my God, what are you doing? This stock has very low option implied volatility. That means that you have to be a buyer. If you are a buyer, you don't buy weekly calls. You buy calls that have 2 or 3 months worth of life and you buy them deep in the money so that it is, in essence, a surrogate stock position, especially when you have choppy, overlapping price action like this, because it tells you this stock doesn't go anywhere fast. And so if you get a little this and that, little back and forth, it's normal for the stock. If you're long options that expire 3 months from now and they're in the money, you're not going to sweat this. You're going to go, this is what the stock does. I'm expecting it to do this, and I'm expecting it to gradually float higher. So there's no panic button. You buy weekly call options that are at the money. Oh, yeah, you got a lot to worry about because this thing wiggles and jiggles all over the dang place. And, I urge you folks that you should not be trading options unless you've been trading stocks successfully for a couple of years. I mean, if you got a 75% win rate trading stock, you don't have to worry about time decay and option implied volatility and all that other garbage. You're focused on your ability to analyze the market. You're focused on your ability to find good stocks. Only when you've been able to hone those skills should you advance to trading options. And if for whatever reason you hell bent to trade options, then buy 2, 3 months worth of time and go in the money so you've got a high delta.
I'm looking here. There's an interesting opportunity on Hood. Now, I like the occasional strangle. And what I like to look for, and I know Dave does this a lot too, but what I like to look for on these type of trades is a stock that has overextended its ETR by a decent amount, but the option IV does not reflect that level of volatility, right? So Hood caught my eye, right? Because you have this strong move by Hood here. It's up $3.88. It's almost double its normal 7-day ATR. Oh, I would expect the option implied volatility to be over 100% on this stock. It's around 70%. Looking at you do the strangles, you basically you want them expiring this week. I mean, you can look at the 47 calls and the 45 puts. You do that for around $1.25 for both for the entire strangle. And usually when you have this overextended move today, you either get a strong continuation tomorrow or a big pullback tomorrow. Either one, and your strangle is probably going to pay off. So I like a strangle here. I might put it on. It's not my recommendation for the week. It's just something for you guys to think about and ruminate. But I do like the occasional strangle, and this one is no exception.
This is a time to be very, very cautious on stocks that are announcing earnings. If you're an option stock or pro user, you're going to see a red E. It would normally be blue. When it turns red, that means that earnings are going to be announced within the next 5 days. In this case, they announced tomorrow. So good catch. You realize that no, this would not be a good swing trade because they're announcing earnings. Be very careful. We're in earnings season now.
It's amazing. I thought we feel like we just got out of the earnings season, and here we are back
I
again.
know. I know. This year is already flying by. thoughts on Dell and ZIM? Dell, ZIM was coming up on some searches. Dell is so patchy and choppy in here. Okay. I just don't like this stuff here. It's got to be, you take a straight line and draw a 45-degree angle. Those are the ones I like. ZIM. So now I wouldn't trade it. I can't count on that stock to do anything. And ZIM, I can't count on this stock to do anything. Oh,
Same thing
look,
with
there's going to be a
INTC.
great
Someone
short.
asked about. I mean,
It's,
what are you going to do with that?
you're predicting the flight of a bat. Okay, go outside and see if you can predict where a bat is going to fly. I want to predict the flight of geese in V formation flying south in November. That's what I want. I can predict where they're going because I know what their motivations are, and I know that they are taking the shortest line between 2 points. So this is just all over the place. I don't see anything here that makes me interested,
Someone
but it
asked me
has been coming up.
earlier, will the Trump inauguration affect the market? Sure, only if you think people at the institutions are going, wait a minute, is Trump being inaugurated? When is that anyway? Oh, shit, we totally forgot. Oh, okay, bye. You honestly think that they're not aware that he's going to be inaugurated on the 20th and that he'll take office? Like, they're pretty well known. They know that. That's going to be, I'm going to guess, just going to guess, priced in to that election gap, but hey, maybe there was some like, well, maybe, I don't know. But chances are they're aware of it. And
It's
when everyone's not aware of it, it's going to be priced in. And I'm going to say this one's priced in.
and it's going to take time for him to enact his policies. So this is not going to be bang, bang, bang. Yes, corporations will anticipate what he's going to be doing and what influence it might possibly have. But this trend line right here is the most important thing that you can keep an eye on. It's on SPY. You want that resistance to hold. Yes, we can go above the 50-day moving average, but we want a lid on the market. All this good news that's coming out, we want that lid to stay in place. And when we start backing off of it, much like this doji right here, okay, which is almost a bearish hammer. This was when Foxconn came out and said, hey, earnings are going to be really good, up 15% this quarter. Got all the semiconductors moving higher, higher, higher. We're well above the 50-day moving average. And by the close of the day, sellers came in. The next day, they try to pop the market up a little bit and test that. No, big bearish candle. That's what I want to see when we try and test this resistance level and this downward sloping channel again, because if I see anything like this, my attention is going to be very, very high. If I see any kind of little follow through selling, I'm going to know this is my window of opportunity right now. Where are those shorts that I've been looking for? I'm going to short them right here, right now. I'm going to be shorting them with what kind of time horizon? 1, 2, 3, 4, 5, maybe 5 days, maybe 6 days. Why? Because that's what the market has been doing. That's what I'm going to expect to happen. So I'll structure my trades accordingly. When the market drops down here, I'm going to take my profits and I'm not going to think about trading until I see the next bounce. Or if there's follow through downside, I'll obviously make note of that as well.
All right, I'm
That's
heading
your
out for the rest of the day.
that is your game plan. SIG is my short, and Harry is long Nvidia. So you got a long and a short to consider between now and next week.
Yeah, I'm heading out for the rest of the day. I'm probably going to put a stop here at my entry on the video, and I'm not going to be looking at it. I'll re-enter if it falls below that, and I'll just come in at a better price. So I'll put a stop in at 135.22, and if it triggers, great. If not, then I'm going to still be long. Either way, everyone, have a good week and good trading.
All right, Harry, thanks so much. We will see you in the chat room. Thanks for attending, everyone. We will see you soon.